Well, happy June, everyone. Chris Lopez here with the market updates. While it is June, we're going to be talking about the stats from May because we don't get the stats in real time until after the month is over. So I've got a great crew here today as usual, plus a new face. So we'll be talking about Southern Colorado trends, Denver trends, and Northern Colorado. So the new face for here is a fellow Your Castle agent, Mr. Steve Medina. Steve, how are you?
Great.
Some of you listeners out there recognize Steve. We did a webinar a couple months ago on some pretty advanced Roth IRA real estate investing strategies, which was phenomenal. Steve's an agent. Steve's an investor himself, and just loves data, loves figuring out strategies. And I was like, hey, Steve, come on the podcast and come share this, not just with me and a couple other people, but share it with the thousands of people that want to know what's going on around town. So, Steve, we're glad to have you on here.
Thank you. Appreciate it.
And the other face from Northern Colorado is Mr. Newt, who's been in here, what, this is your third or fourth time, right?
Fourth
or five time? Are we getting up there? All right. Well, always good to have you back. I know you guys drove down together. You're already talking some shop on the way down here, talking about what's going on. We got stats, we got steals, we got stories to talk about. It's going to be a fun show. Moving on down, Preston Newberry down here in Denver. Preston, always good to have you.
Always good to be here, Chris. Thanks again.
And last but not least, Jenny Bayless, representing both Pueblo and Colorado Springs. What's up, Jenny?
Guys. Not much. How about you guys?
Excited to actually talk about some data because, you know, as the market has shifted, there's different data, there's different opportunities, there's different things going on. So it'll be a fun one. And Jenny, let's start with you down south again, just from a high level. What's going on? What are some stats down there?
Yeah, so I think the standout stats for down here, new listings went up month over month, still down year over year. Sales went up about 14% month over month, which is in line with, you know, the fact that it's spring selling season right now. It makes perfect seasonality sense. And then another key point is that median sales price jumped 3.5% month over month. Which then brings the difference year over year to only negative 2.5% from May 2023 to 2022, which I thought was surprising. I know a few months back, we were kind of thinking that the median sales price was going to kind of stay level, so that making that year over year gap much wider, but it didn't seem to play out that way. So I thought that was kind of the most standout stat. And looking to the reports, June of last year was, you know, the kind of the peak in median home price. So we will see, you know, drum roll, what the year over year for June ends up being. And I think that will kind of be, you know, the story to tell for this year.
All right. You got any predictions for how the next couple months will be based on just boots on the ground activity, or?
I have no idea.
Knows?
I've been wrong every single time I've tried to predict something. So
eventually get something right if you keep predicting, right?
Yeah.
Just keep throwing it at the dartboard, you know?
Yeah. But what's it like there? I know you and Leah, you're out there in the field, you're doing deals. Just what's the sentiment on the ground? What's, you know, just there's the stats and then there's the boots on the ground.
Yeah, it's been slow. So I know you probably don't want to hear that, but yeah, it's just like a lot of investor sentiment has been rather negative. I don't know if it's just, you know, kind of the news stories that we're hearing. Are we in a recession? Are we not? Are we, you know, out of it? Like, what's happening? No one knows what's going on. And I think that since investing is in a way, you know, a discretionary action, I think people are just kind of like a little skittish on that. Is kind of the general feeling that we've been getting.
Yeah. And is that for both like Pueblo and Springs? Are you not seeing any like major differences in the markets in terms of like stats or sentiment?
Yeah. So for Colorado Springs, the strategy is just super, super narrow for things that are actually working right now. You can pretty much count out any sort of leveraged multifamily with a, you know, reasonable down payment amount. Room by room is a great strategy. House hacking is a great strategy in Colorado Springs. Those are pretty much the only things that with a levered return that makes sense at the moment. Pueblo, I know we've been doing a lot of podcasts on the Pueblo market. Still a great option for long-term rentals. So if you are a traditional buy and hold rental, I definitely encourage looking down there if you're still looking to buy, because it's still working. So I think that's, pretty exciting that we still have a market in Colorado that works for long-term buy and hold with traditional down payment amounts.
Yeah. Have you seen more people continue to like shift their focus down to Pueblo just based off of numbers and trends?
Yep. I would say that people that had their hearts set on Colorado Springs weren't super into Pueblo. They've kind of just pressed pause at this point. People that are more open to market are definitely starting to shift their mindset down to Pueblo. So
okay. All right. Well, Steve, I know so we were getting the about to record on here, and then Steve started asking Jenny a question, and I promptly interrupted you like 3 words, and I said, stop. Save that for the podcast. It was a really good question. So now you get a chance to ask the question. It's like, not only do the 3 of us, where we got 5 of us want to hear it, there's a few hundred other people want to hear it as well.
Yeah.
So now you have permission to ask your question, Steve.
There you go. So we're seeing a lot of deep discounting on some builders that are trying to move some inventory. And I was wondering if you were seeing any of that down in the Springs or Pueblo.
Yeah, so I have not. So kind of my my tell on that is how many like brunches and afternoon teas I'm invited to from the builders, and that has been declining. So just in terms of that has not been as prevalent as it has 6 months ago or so. But just in terms of like what I'm seeing, $20,000-$30,000 discount from new builds. I don't know if that's a deal or not for people, but they are trying to get some of their lagging inventory off the books, but nothing compared to what it was like say last fall.
What was it like last fall for context?
Oh, it was every day, just inbox full of builders, just trying to reach out to every single agent that they can get their hands on. Please, end of year inventory, like take this off our hands, that sort of thing. So
what are you seeing up north then, Steve, in terms of like the new builds? So talk about that a little bit more.
Yeah, we've got so much space up north. And so you're seeing kind of the populations grow. And so they're trying to build out ahead of it, but they can't get rid of all of it. And so we're seeing there's some in some different parts where you can see up to $80,000. There's one I just happened to find, and it's like $78,000 that they're trying to move like the last units. And those are usually good for rentals because it may not be a place where you want to live, but it's great for somebody that's looking for a place to live. And so if you can get that good discount right now, get into it, refinance it in a couple of years. If it's not, then, you're kind of starting out ahead of the game.
What's the price point on that approximately for $78,000? I mean, that's huge.
It was close to $430,
I think, right?
Let me see it right here.
Oh, okay.
So it was $495. It's going for $417. It's 3-bed, 2.5 bath, 1,850 square feet, reduced by $78,000.
Wow, that's what, 20% ish
Yeah.
price reduction, right? If I'm doing my mental math right.
And there's some others in some of those markets, down 33, down 62. So, for investors, those are great because you know what, when you get into sometimes in a neighborhood, if the people don't want one where the cars drive down the street and the lights, it happens to be at the end of the street where they turn. You don't want that to live in, but when you turn it over to be a rental, it's less. So if you can get a deal on it, that's still a great place to be.
And I mean, I don't know the stats, but Northern Colorado, you guys just it feels like so much more new builds up there than other parts. And I know that's always like I'd say a much more common investing strategy up there is, hey, go buy in a new subdivision new build because that is where inventory is. Prices and rents have been pretty decent up there for it. I think you even bought some yourself doing some nomads and rentals, right?
Yeah. It's funny because you can, because we're so close in the market and out there, you can actually see. And there was one we bought last year, and we house hacked through our son. And when I did the analysis, I budgeted about $2,650 a month for rent. We were able to go to $2,895, so $250 more a month because it's in this very sought after community that has this amazing pool. It's got farm to table. You can walk out your door and pick cherries. So everybody is trying to get into that place. So it was snapped up, And then we've got another one in Greeley we're actually turn over, and it takes a little bit longer. But so these sought after neighborhoods, if they've got a good deal going, get in, and it's, one of those that it kind of like start paying dividends right away. And, with some of the house hack at 5% down, you may have to ride a year or two because we have PMI on it and things that. But it'll be on the good side in a couple years.
What did you pay for it?
$492.
$492.
4 bed, 3 bath.
Okay.
3 car garage. So.
Yeah, sounds like a perfect rental.
Perfect.
Wow.
Yeah. So that's where, depending upon the neighborhoods, that's where Newt and I get to spend our time, is kind of figuring out which ones have, more pull than the others. And that's where we're really seeing, because if you guys haven't driven up the 25 corridor, go up and you'll see that construction. That construction puts people off, but it's setting up something coming in the future. If you haven't seen,
pretty much nonstop. I mean, by the time you get out of,
it's a megalopolis all the way up. We've got a Buc-ee's coming. For those of you guys don't know Buc-ee's, it's like that. It's an amusement park.
It's like an amusement park plus Costco plus gas station.
Yep.
Yeah.
We just drove by it today, and it's already, the walls are out. I mean, the place is going up super fast.
I'm so intrigued to see this place once it's up and running after hearing about it. Like,
we're taking a field trip, Chris.
Googling, yeah.
They're crazy. We went and saw one in January down in Texas because we were looking at some investments down there. It's going to be 74,000 square feet, 116 fuel pumps. It's just crazy. So it'll be open 2024. So all of those businesses are doing amazing amounts of data research because they're not putting that in just for grins.
Oh yeah, they're no dummies.
Yeah. So the ones like the people that do the short-term rentals and they want to be less than 10 minutes walking from a Starbucks. You look along that whole corridor and it's nothing but big businesses. And the way I think some of the population growth's coming, and this is why I love numbers, so I won't wear you out with them, but basically, last year, Weld County was the fastest growing county in Colorado between July 21 and July 2022. It was 36% of the overall state's growth.
Wait,
wow.
Weld County was?
Weld County. That's
wow.
Right. And then when you add Larimer County, so just July 21 to July 2022, when you add Larimer, that's 50% of the entire state's growth in that 1 year is in our 2 counties.
No kidding, really?
Yep. That's not Boulder. That's not so.
That's Johnstown, Windsor, Greeley.
I did not know it was growing that quickly up there. I knew it was growing, but
it's going like crazy. I mean, I didn't realize those were the numbers, but definitely just driving up there, you see that. Yeah. I mean, there's so much expansion and so much growth up there. So
they're busting out. There's a new $1 billion development that's on the books right now, and they're still working it through. The McWhinneys are putting it in at South Centera. They're putting $1 billion of retail, multifamily, townhomes, so people will be able to go in there and buy in there, and it's right off of 34. So it's like perfect access to get up and down the corridor. And the prices are in reasonable amounts, and so the way that population growth's going to go is not projected to stop either. So they're
so what you're saying is the big money's still betting on it.
Yep.
Yeah.
And that, I mean, if I could only pick like one trend to like invest on, it would be just population growth. Is a population growing or shrinking? Right. Because if a population is growing, that kind of dictates in my mind so much of the stuff. I mean, jobs are going there, or jobs are bringing the population. What sure it works, but man, population is growing. Just ride the trend.
Yeah. Yeah, it's pretty impressive. I mean, everywhere you go, there's construction, so you just get used to it. Whether it's, up and down. Johnstown just had I think the Revere's putting in 1,500 new homes. You got Barefoot Lakes. You got a bunch of those that are just.
That's Firestone, yeah.
Yeah, Firestone. So
growing like crazy.
Yeah.
Newt, you have a hard act to follow up with those type of stats, man.
That's why I brought Steve. He's the stats guy.
So you're the smart one. You brought the right who, right?
That's right.
I know why he didn't let me drive alone. If I got lost, I might not be able to get it.
Yeah, I mean, Steve, he's. I love hanging out with Steve because I always learn something.
Yeah,
he's always studying the trends as far as what's going on around our area, and I mean, he's got tons of content to be able to help with, figuring out what's going to happen when we're growing, even out further east of where we don't necessarily tend to do things. I mean, everything tends to be growing up north for whatever reason. We're the popular kids now. So the prices are going to start reflecting that, and it's a good time to get in.
No. What are you feeling? Because I know you're very active, putting deals together up there, working with clients. you're also the managing broker for your castle up there, and you know, lead the agents up there. So you really have your finger on the pulse for like your own clients, plus helping the other agents up there. Like, what's the sentiment? What's the vibe up there right now? Like the boots on the ground.
Great question. So I would say that for owner occupancies in the, I think we've actually discussed this, between that $600,000 and $900,000 range, those are slower on market to move, just because it's not a great time with interest rates to want to go ahead and upgrade your house, right? But I just got into a bidding war on not me personally, but I represented a client that put in an offer competing for a duplex in Fort Collins that you actually saw on the MLS as well. And it got eaten up right away.
And over asking.
Sadly, we did not get it. But
what were the basic numbers on there? So is a duplex in Fort Collins.
Duplex in Fort Collins. It was the list price was $535. The rents are under rented. It's one side was $1,350 and one was $1,550.
Mm-hmm.
So I mean, it's my particular client wanted to make it a nomad type of thing. That she wanted to house hack it and get in there and live on one side, have the
rent the other out. Yeah,
rent the other side out, so that it was able to help her with the mortgage anyway. And we didn't get into that one, but there's more. I'm seeing more multifamily types of properties that are like buy and hold types of properties for investors that are coming on the market. Some make sense in the numbers. I saw one in Loveland that yesterday that just, it's under rented. It's not a great area. Probably won't be a huge investment unless you bought it for cash. You could use it for cash flow. But I'll constantly bring up Greeley because it's a college town.
Yeah.
I'm starting to see more Greeley multifamily type properties. They're more college kid rentals, but there's more of those coming on the market, and I'm seeing that the prices points are making sense still, and you can have a positive cash flow.
I just think it's fascinating because I think what happens is we're all in this environment now where we've got interest rates that are high.
Let's pull up this graph here.
Yeah.
This actually, so we'll put this in the show notes, but this is a PowerPoint slide that Steve put together here.
And this is where I think as investors, strategic investors, that the people that are starting to get it are starting to see that, Wayne Gretzky has this saying, it says, good hockey players go to the puck. Great hockey players go where the puck's going to be. And to me, this is a perfect example of that. So right now you're seeing that higher interest rates are pushing down people's buying power.
Yeah.
And people are selling now because they have a reason. They have something that they either have to move or, somebody's, some reason that they have to sell because they choose not to because the buying power isn't high, so they can't get quite the dollar they want. But for buyers, this is a perfect time. This is where we're going to try and do two more. I've got two sons that we're going to get into two different places and do house hacks with both of them, because what I can do is I can get into a house for less. I can negotiate. I don't have to compete with others. And that other side of it is, so I get in as much as we can afford and then get roommates to cover it. Then on the other side, I can refinance it. And so when those interest rates start to lessen, so when we get through this and you go from 7 to 6 to 5, and who knows where that'll be, that buying power from, call it a $500,000 house with $400,000 in a loan, well, your buying power goes up by about $45,000. So when those rates come down, everybody starts running to the market and you can buy more. You're going to be competing with other people that are doing the exact same thing. All this pent up demand, I don't want to compete with them. I want to have one in the hopper.
We've been there. We've seen what that looks like, right? So, we know how that world is.
So if I can get something for $510 for them, they get roommates. When this pressure relieves, because that's what the Fed's doing, right? They're trying, 32% of the CPI is housing.
It's real estate. Yep.
So that's what they're trying to knock down, because energy's down. All those are down. But then when that pops back up, that's going to push people to be able to say, I got to get off the fence. The interest rates are getting better. Let's go compete. We're going to compete with everybody. Right now, you don't compete. You might actually be able to get some better concessions and some of that. And so that's where my head's at as an investor, is I'm going in and saying, let's buy now.
Yep.
And then get a good deal. And then we'll refinance when it comes down. Because a lot of these, there's some lenders out there that within 12 months, they'll refinance and they won't charge
free
you
of
for
charge. Yep.
Yeah, I think a lot of lenders are doing that now.
Yeah.
I mean, for obvious reasons, they
Yeah.
want to help people buy a home and obviously capture their business on there. But yeah, if you're out there buying property, make sure you talk with your lender about that and ask for a free refinance coupon or whatever way to put it, because that is hopefully what happens. And if interest rates don't go down, well, then you're still in a good spot.
You're still in a good spot. Exactly.
Well, yeah. And so we're still seeing investors buy. So I Newt and I were talking about, we pulled some data that says, you know what, we're not at the level we were at before. And multifamilies, the small multifamilies aren't doing quite as much, but there was 175 between the two counties that were still buying. They're absentee. So it could be a second home, but basically it's investors. And so we're seeing condos be a bigger deal in Larimer last month. That was like,
do you think that has to do with just price point?
A little bit of price point, I think. So it's some of those where can you get in and get access, and so but people are still doing it. So if you look at it, it's off trend, but the smart and savvy investors are still doing it. It's not like it just stopped for everybody, but what happens is people get stuck in this mindset that says, oh my God, the interest rates are high, I'll wait for them to come down. They don't realize what will happen with that.
Well, that's also where the opportunity is, right? You got to do something different than what everyone else is doing.
Yep.
And if everyone's sitting on the sidelines and there's opportunity or future opportunity, then, be ready for that.
Well, an interesting thing that I was talking about earlier today is I saw a map of just talking about like global real estate prices and the impact of inflation this last year. And it's something I had not really thought about was, hey, what's the real impact of inflation on, the value of assets? And I mean, yes, we've seen prices decline, go flat, but if you actually take into account, inflation of 8% or so over last year, well, that impacts, that has that lowers the price of the value or the price of the home as well. And essentially like that is another way of saying, hey, we're probably at one of the lowest price points right now that you will be, because none of the data, again, there might be some black swan event, but you can never predict those. But like none of the data, when you look at just even level of homes, like there's still not enough new builds coming online. The population growth is happening, all the stuff going on. Like there's still just much more demand than supply. And now we've seen prices flat. We've seen inflation last year go up. Like this is probably going to be one of the best times, relatively speaking. And again, take it with a grain of salt because we're using relatively speaking for, crazy appreciation the last decade. It's going to be one of those lowest price points, or one of the best opportunities for a lower price point.
Well, and that's where I think people get hung up on that. So last year when we bought this one with our son, it was February, we locked in a rate of 4.375 for him. And I was like, oh my God, I hope it doesn't go up to that. And now you're looking at it going, thank God we found that.
Now we're not at six and a quarter, or
That's
6.5, right?
So the same thing will happen once this starts to moderate and that interest rate goes down. That 510 is going to be worth 600 because everybody's going to have higher buying power. They're going to compete. But I think that's where the savvy investors start to see. I can start to see that future, not necessarily just see today, because people see today are on the fence.
Yeah.
And people that see tomorrow are the ones that are still buying. So we had 175 of those, and that's not owner occupied. So, we're still seeing a lot of those happen. It's off trend, but we're still seeing. So the savvy investors are still doing what they've always been doing.
Yeah. For long-term multipling, still a lot of opportunity out there. If you're trying to get rich in a year or so or get amazing cash for the day, not going to happen. But for long-term strategic stuff, it still makes a lot of sense. And the trends are still,
in their favor.
In our favor,
right?
yeah.
Yeah, absolutely.
So what are some stats in Denver here, Preston?
So things are kind of status quo at the moment. Prices are, pretty much around flat from what we've seen over the last couple months. So not a big change there, which I think kind of echoes what we're seeing up in northern Colorado as well. It was good to hear things are a little bit better in Colorado Springs right now. The interesting thing for me is just, days on market going up and then new versus active listings, right? And I think the correlation for me there is we have up 43% of active listings from where we were a year ago in May of 2022. But current new listings coming on the market is down about 24%, right? So for me, that just says, hey, there's some stuff that's hanging out there on the market a lot longer than what we're seeing. And that's actually up like almost 144% from last year. So, there's things that are moving quickly and, houses that are priced right and, places people want to be, and I know we've talked about that, are moving quickly, but I think there's a lot of opportunity from stuff that's been sitting on the market that, for whatever reason wasn't priced right, didn't get marketed correctly or whatever the case may be. So I think there's definitely, to me, that's a telling number for some opportunity for stuff that's, hanging out on the market.
Well, and just to kind of add to that, I went in and was doing a little bit of work and seeing things that were on the market for at least 30 days that were still active. And the flippers are taking a little bit of challenge too, because they, get one, flip it. And so, there's opportunities out there. It's just being, careful and considerate and focused and intentional in finding it, because you'll find those out there. It's just waiting for the right one.
You got to be patient. And I tell all my clients that right now, like, don't be in a hurry. We want to make something happen, but be patient. Let's find the right deal.
Yep.
We have that opportunity right now, but also when that deal comes up, you got to be ready to move, and we got to go quick,
Yeah.
So let's, just be opportunistic and be patient.
Yeah. And so to come back and talk about, you talked about new listings are down, but total active listings or total inventory is up quite a bit from year over year. So,
which means we only still have 5,200 active listings.
Yeah. And, historically about $15,000 would be the historical average, which would be right around a balanced market. So, here that 43% up, we are still very much in the seller's market due to at least low inventory on there. So while it's a big percent increase, it's still relatively low historically speaking.
Sure.
And I think it's how it is all up and down the front range too, as far as just what's going on.
Yeah. And I think we're seeing a lot more activity with sellers, even when their house is on the market for the weekend and they've got plenty of offers, there's still negotiating going on, right? And I think one of the other interesting stats to me was that 60% of sellers had to offer a concession to get their deal done. And that might not have happened right away when it went under contract, but as you go through the transaction or whatever the case may be, and I'm guessing, based on what we're seeing, that a lot of that probably has to do with rate buy downs and, getting them into a spot where the payment makes sense and where the numbers make sense. And it's kind of what my thought is.
Yeah.
Well, and there's a lot of first-time buyers that are, challenged to get into their homes. And so you're seeing a lot of this build-to-rent that's going build-to-rent now is going faster than build-to-own. The nightly news 2 days ago had basically, I think John Burns Real Estate said there's 708 developments coming across the country that are build to rent. And so if that doesn't tell you, and then Blackstone just, funded a $30 billion real estate investment. So the big boys are saying this is going to be okay.
And it's going to be a thing for a while.
And it's going to be a thing for a while because there's so many people that are going to be waiting to get into these, and there's going to be so much demand. That's why I think, it's good to get in now, because those guys aren't playing, they aren't onesie twosie in it. They're going in big.
No, they're not playing Little League Baseball.
Yeah.
So for down south, Jenny, and up north, guys, are you guys seeing any more investors just starting to list and sell their properties to move their capital? I ask that because I've definitely seen more people in Denver Metro do it. I think it's a combination of, part of it's the rental application, rental license process, especially for Denver County too, more and more. And then down there, and then also just some investors saying, hey, I've gotten some great appreciation. They're kind of entering a different phase of their life and starting to unload some properties. We've seen an uptick in investors selling properties. And again, that's partly just some laws and also where they are at in their careers and life as well. Are you guys seeing upticks in investors unloading some of their properties to move it elsewhere?
Yeah.
Go ahead.
Well, I haven't seen that, but anecdotally, what people are doing is Larimer County's a little bit more kind of following a little bit of Denver lead and some of that, and so they're starting to put more regulations on short-term rentals and some of that. So it's good, but you have to be smart about it and make sure you manage it. Weld County is a much different story. So during they're butt up against each other, adjacent. But Weld County is much more open and the way they do things. So it's a lot more open. So I think, there's a lot more opportunity to do various things unless you have HOAs. So the HOA that I live in doesn't allow anything under 6 months.
Okay.
And so you can't do a short-term rental. You can't even, you might be able to sneak in a medium-term rental. Larimer's doing some of that. So I haven't seen any broad scale, selling of those and anybody I talk to in that. So,
okay. Yeah. And as far as, my experience would be anecdotal too, because I don't have any stats for that. But as far as who's selling, but I am seeing more of an uptick. It seems to me, in as far as certain investment properties, it seems like maybe people are just cashing out. They're, like you said, they're that time in their life and they're just trying to cash out and go on a cruise or whatever.
Yeah.
Well, I mean, what it might be is because when I pulled some of that data on title, if we're not seeing absentee owners, which it could be different from a house hack, and the duplexes and triplexes are down, that means that somebody's not able to buy them or they're not being sold. So those are down. So I think, that's one of those. So I think last month there were 4 in Larimer, duplex, triplex that were sold. And in Weld, there were 7. So people aren't really selling them because they're not buying them. So, it's that, you've got have somebody on each side of the transaction. So there's not a lot of them, but
I think I see a lot more. I was specifically thinking a lot of like single family homes. A lot of investors some investors are starting to list and sell some of those. And of course,
sure.
The play for that right now, say if you're going to sell a single family home, high likelihood it's going to be sold to a owner occupant, which is a very different story than an investor looking to buy, buy good cash flow multi or anything.
Yeah.
What about deals, Preston?
Well, let's talk about your house, Chris. I know we've been chatting a
Let's
little bit
talk
about that, and we've had some walkthroughs over there, and obviously things are kind of moving forward. We've had some really good interest, but I think that's a really unique opportunity and something I wanted to chat about because there are some very loose, or should I say, less restrictive rules, being that it's an unincorporated Adams County, that allow for some opportunity for short-term, medium-term, or, long-term rental like you had it as well. I think that that's just kind of one of those things, much like Weld County versus, other counties up in northern Colorado that presents some opportunity for somebody. So, looking at that, we've kind of gone through and we're in the process of figuring out if it's going to be better to do, fix up the property, sell it as is, whatever the case may be. I think the numbers work all around. So, that's kind of one of the deals I wanted to talk up and bring up. And if anybody has any questions, reach out and let me know.
Yeah. And I mean, going back here is I'm selling my rentals, and a couple of years ago I was not planning on selling it, and but just the one thing I've learned about ADUs, and because ADUs, they're sexy, a lot of people want them, and they are great investments because you have you can get more rental income for less value of the purchase.
Mm-hmm.
The issue that for a lot of the ADUs are is, hey, if they were built 20, 30, 40 years ago, they bring some uniqueness to the property. And while I've handled a lot of some unique stuff on there, it's still a unique property. And I'm very much a hands-off landlord. And that's something that I'm, realizing more and more about myself as the more hands-off I am, the better it fits for me. And that's partly I've been, got a young family now, and I'm spending a lot more time on some business activities versus, investing activities per se. To where it just needs someone that can handle the uniqueness and actually go in there and give it more attention. Where for me, it's very much like a secondary thought, which isn't good for the property. It's not good for the tenants there. And it's also not putting an asset to its highest and best use, which is one of the things that kind of grates me as a person in general. Is like, oh, that's an underutilized asset. I don't like that. And so, it cash flows as a long-term rental, medium-term rental. And since it is unincorporated Adams, there is opportunity up there to do a short-term rental as well.
Yep. And now, the ADU is completely renovated and rehabbed. It looks great. And as I mentioned, we're looking to go in and doing some stuff in the main house too. But there's just a lot of opportunity there. And I think there's,
And aside from me selling and all that, obviously I want to sell it. But also, we're doing extensive documentation on there as well. Preston mentioned we did a property walk. We have a video that we just posted, I think, last week to YouTube. Great thing that Jules and team put together. We're going to do a couple more property walks as well because we are going to fix up the front house to sell, in 4 weeks or 6 weeks when we go to the market with it. So it's a great way to watch the process of this property went vacant, and anytime a property goes vacant, you come back and revisit it. Hey, what's the best use of this? Because anytime you refinance it or release it, you are essentially repurchasing it again. So it's a great time to come reevaluate it. And then you want to look at all different options on there. So try and do a really good job to document it so people understand what opportunities there are out there, but also as you have rental properties, hey, what are the options you have and what do you do to go out there with it? So if you guys have any not even buying it, just interest in hey, how do you evaluate this? Or what do you do here? Please plug in. I want to be very,
this is a very
educational about it.
Educational and open process, right?
I mean, that's just my personality, and that's also the way that, like, it also helps drive a lot of business and clients and deals, and like you provide value to people that way. So, aside from me actually selling it as an investor to the market out there, investors, other agents come learn from it, come check it out, and kind of come see the process, because there's so many moving parts on there. And looking at how to sell investment property, it is very, very different than just selling a traditional owner-occupant property, because there's a lot more moving parts on there. Not good or not bad. It's just different. And that's something a lot of people don't realize. Whether they're an agent or they're an investor, they don't realize this, and they're oftentimes like leaving money on the table. So yeah.
Chris, I have a question. Are you planning on doing a 1031 exchange for this property, just kind of cashing out on it? Or, what are your future plans for the capital to redeploy it?
So I'll probably cash out on there. So I bought this actually about 2 years ago next month for, I think, $470 or $475. I did a 15% down loan on there just to go like max leverage, like a 15% down 30-year fixed. And after we fixed up, sell it, I can probably about double my money in terms of like down payment, just like pure on there. So if you look at it from like a 2-year time frame, if I can double my money in 2 years, that's a really good return. Again, I'll let you know in 6 weeks if I actually can do that or not. But I think realistically, it looks like we can do that. So it kind of gives me, a good return on there. I did check with my accountant as far as like what my capital gains and depreciation recapture would be. And if I double my money based on that, I think I would owe right around about $15,000 between capital gains and depreciation recapture. So not a huge tax bill to write off. So, I look at that. Okay, that doesn't faze me. Even have to pay some, money on there. Part of the reason I'm not doing 1031 is because I don't have a huge amount of equity to go roll into something. Part of it too goes along with what I was saying a few minutes ago about me being a little bit more hands off. My taxes are not done so far this year, and they will probably be done a couple days for the end.
Yep.
And, with how real estate's been, my tax returns last year don't look great on paper. So I don't want to go through all the extra underwriting to go through to get a loan. So part of that is just like kind of me being lazy and a headache. I'm like, well, I'm not going to do all this extra work to not get like an amazing loan right now. And again, that's just more just like I don't want to deal with it. So plan is to sell it. And I will probably roll over a good chunk of it into like an NDF6 with Ironton to get some depreciation on there. And some of that depreciation can offset the capital gains, depreciation recapture. I think I'll still owe a few bucks on there, but I can, it's not a real 1031, but I'll get the gains on there. I'll get some extra depreciation over here. So kind of like left pocket, right pocket type thing. So I'm going through the exercise because I just want to do that and kind of go hands off on there. And I don't want to deal with a 1031 right now because I'm trying to simplify a few things in my life. And not
complicate them.
Yeah. I've already with the young family and the business stuff, which I love doing that stuff. And I really am realizing, hey, I really like more of the turnkey products or more about partnering with people and going with like people that are really great at operating properties, because I am not a great operator. I'm great at finding deals and connecting people. When it actually comes to like operating and rehabbing, hey, you're better. You're better. Most people are better at that than me. So I'm really just kind of leaning more into like, as I, my next phase of my life and just also trying to simplify some things.
I'm actually glad you brought up that you are not doing the 1031 exchange, because that a lot of times people get scared into wanting to sell an investment property because they're going to get smoked in taxes. But that's not always the case. And they need to, of course, talk to their tax accountant or their CPA or, their advisor. But, there may be the benefit of unloading a property that doesn't make sense for them anymore in that capacity. So I'm glad you brought that up.
Yeah, this is the first time I've ever actually done it myself, because I've always been like, my mindset's always been, hey, once I have a property, it's 1031 and swap until I drop, meaning 1031 until I die, until I drop, and then, whoever
and it's somebody else's problem.
Yeah,
right?
they get the stepped-up basis.
Yeah.
But then, as I say, anytime you go sell anything, even in the normal, you always go talk to your accountant and say, hey, what's the downside? And if I can make about, I put about $80,000 between down payment and some closing costs into here. Cash has been about break even between a lower down payment and just some extra like expenses throughout the year. So all that's been about break even the last couple of years, maybe a couple bucks ahead on the cash flow. But if I can get, my principal back, $80,000 in change back, and pay $10,000 to $15,000 in taxes, and have that money to go do what I want with it, I'm very happy with that right now.
Yeah.
Now, if it was a much larger tax bill, I'd be saying something else. But $10,000, why never want to write it? It's not a huge deal.
Not worth the headache.
Yeah.
Well, and I helped a client recently that did the same thing that you're talking about, and he was a small business owner, so he actually had it offset with the losses on the business, that he was able to offset the tax bill that he was going to hit with that sale. So
yeah, and that's the other thing is I've got losses from last year from just like income being down as a real estate professional, and depreciation from other properties as well. Like I, on paper, I'm the tax returns, there's a lot of negative numbers on there. A lot of it being phantom depreciation, some of just being the reality of we're very we're very commission driven on here. That's lower as well. So I'm like, great, I can take some money off of here, probably not pay any taxes directly on there this year, and I'm a happy camper.
Yeah.
But yeah, I've had a few other
free
small
up
businesses.
mental space.
Oh, that's the thing too. That is something that like I did not value until I actually started having a family, was like how much weird stuff I already stress about with, kids and all that. And then I was like, every ounce of mental space I can bring up, free up. I'm very happy with that right now. Yeah.
Good for you.
Yeah. I think there's definitely a very underlooked value to that.
Does that mean you're selling a property, Jenny?
No, but the thought has crossed my mind. So I'm cash flowing in my bank account on these things, but in my head, oh my gosh, I'm like in a huge deficit. Like I've just had problem after problem after problem with my properties this year. So the thought has crossed my mind. It would be kind of tempting to cash out on some of these things, but I'm gonna toe the line still. So
yeah, I think that's something good to like, part of the reason I'm bringing this up because I think, it helps other people realize, hey, the market condition has changed. The appreciation party is over. And, I bought this as a highly leveraged property. So cash flow was not the main run for this property. It was just, hey, it's going to cash flow in the long run. And since it's a property with an ADU, it has extra cash flow than, a similarly priced property. But I kind of already I got my pop on there from appreciation. It's a really good property, but it has that uniqueness. So for me, that's kind of like the headache property in my portfolio. And that's more of a me, not the property issue on there. And so I think it's a good time for people to evaluate, hey, if there's a property for whatever reason, because it truly is a dog in your portfolio, or it's just a headache, or, bad juju, or whatever it is, or you've got some, a bunch of losses from something else, it's a good time to, look at that, or use a phrase like cull the herd.
Yeah.
I think it's always a great thing to look at.
Well, and one of the things I came into investing, and it was kind of like luck and a little bit intentional, is I had been studying about like the different levels and price points of renters. And so when they said like the highest, they were the most high maintenance because they were paying on really big properties. They were the most challenging because they were the most demanding. But if you get in the second two quartiles, so if you're at the lowest, it's going to be, to me, what my research was, it's going to be the most challenging of tenants. They want to go month to month. They don't make payments. You have them damaging stuff. That second quartile, when you're going up, it's kind of right there too. So I've got one that's kind of like in the lower second quartile, and I seem to have problems with it. But the ones that are a little bit higher, they're good renters that have good incomes, and they're protecting their credit, and they're going to treat it better. And so I've had more success in those. So now I'm trying to kind of focus down a little bit more to get those kind of places. And I like some of the new builds because I know that my maintenance, the first year is warranty stuff from the builder. Mm-hmm. So I get all the bugs worked out in the first year. And then I should have a handful of years that won't need a new water heater, won't need a new roof.
It should be zero CapEx.
Yeah.
Knock on wood.
And that's, a garage could fall, a door could fall off, or, something like that. Things can go wrong. But that's where I'm kind of like continuing, because if I go and I'm, at the C class and D class, I'm going to have more challenges. And I don't know, Jenny, do you have a ballpark for the kind of the ones that are giving you the most headaches? Are they A class, B class, C class, or are you just all over the board?
Yeah, so I have to say, none of my tenants have been giving me headaches. They have all been weird situations that have been happening to every single one of my properties. And, the 6-7 years that I've been investing, I have not had such a influx of like weird things happening all at the same time, like people breaking into, vacant units and stealing copper pipes, leaking from one unit down to another across pretty much all of my adjacent, fourplex units, 2 sets of floods. One was a burst pipe, one was the rain that we had. I mean, it's just been like thing after thing.
Is it
after
the age
thing.
of them? Because I was talking with another.
I think it's just bad luck. I think it's finally catching up.
I think it all comes with law of averages, right? Like eventually in the long run, like it averages out, and you go years, all of a sudden, like bad luck happens in threes, or there's some saying like that, I believe, and that's just how it happens sometimes. What was it saying,
Chris? I mean, we always talk about when things are going to happen, not if, and this happens to be the when, and when it all happens at the same time, it's like, good God. Yeah.
And the universe just says we're making it happen when you have young kids at home with you as well. Right?
Oh, absolutely. Right? Yep.
If it helps, we were talking with another realtor partner of ours yesterday, and she was telling us about how her, what was it, a rental that had a SWAT team come in and like knocked out every window, and that's that black swan. Yeah. So it's like, what do you do if there's some of those things that happen? And that's why I'm trying to pick up where we go. So
if the SWAT does that, is the homeowner, who's responsible for the damages?
We're going to find out. That's literally, it just happened like a couple of days ago.
I've never thought about that.
Who thinks that you need insurance on that?
Man, my understanding.
I looked through my insurance.
That's your problem, but we'll see.
Well, I wouldn't be surprised. That's
So that's reason number 233 that I try and get a little bit better property, and then the people that are in them aren't going to be doing that kind of stuff that's going to get the SWAT team. It wasn't an errant call. It was probably an appropriate call, but
Now, as we're talking about this stuff, I mean, we just spent 5 minutes, 10 minutes talking about some, when stuff bad happens, and we always want to be very transparent and get people prepared to say, to be ready for it, and also be financially prepared for contingencies. Yep. But realize too, this is why real estate gives you much better returns than many other, investments out there. While we all continue to invest in real estate, while we're kind of like griping about it, we're still buying more and more real estate. Why? Because the reward is still much better than the pain. So I just want to put that in a context on there as well. But there is, this is also reality. Like there's the great, the good, the bad, the ugly. And in real estate, we deal with that, and we should make more money in the stock market, and we should make money than a lot of other asset classes because we deal with this stuff. But be prepared for it emotionally and financially.
But I think that's where I think the appreciation right now is a pause. It's not done forever, right? And then but getting into some of the right places and getting the right renters and having the right partners and all that can limit a lot of that stuff.
Oh yeah.
And so that's what I think. Working with a talented group like this is we both invest, we're agents, we know how this works, we know where stuff's at. So if you want to learn how to try and avoid some of those problems, it doesn't mean like Jenny, like you might not run into them. And I had an abandonment last year in one of mine, and the carpets were about at that age, so I just put in brand new carpet for the next person, and so you just keep going. But that place appreciated over a year and a half until that happened. It was like $80,000. And I go, you know what? When you put down 100 and you get 80 back, and it's still in the process, and you got a 3% interest rate on it, it's still pretty darn good. So it's we moan about it, but it's but it's trying to like there's probability and possibility. Anything's possible.
Yes.
But the probability can go down if you do it right. And that's what we're all about, is trying to figure out how to help people do it right. So I just went through a year with he was 23 when we bought the house with my son in a house hack. How we did it, what his income was, what his DTI was, all of those things we learned through that process. And now he's moving out. We've got a partnership. I've moved the property into an LLC. and it's going to cost me a little bit more to do a partnership return, but he's going to learn now. So I'm teaching that next generation. And so if
That's
people are out
cool.
there that are thinking about investing and they go, I don't know where to get the money, you may have a parent that's wise to it or needs to get educated, and that's what we can do. But there's more ways. Sometimes we get stuck in this place where you go, I apply all the rules to my one situation, but there are little places that you can get better deals, and there's better places, and try and limit your probability and likelihood of problems.
Well said.
I was just going to piggyback on that too. As far as Envision advisors and us all being investors, you run into a lot of things as an investor that you cannot plan for. Right. And you would never know to even think about until they happen. So for those investors that are actually or potential investors that are looking to get started, we're a great team for that.
Oh, absolutely.
Because we're experiencing that.
And also, I mean, something I think I'm very proud of is we're also very transparent, and we try to give you hey, the good, the bad, and the ugly, because, I feel like that's our duty, and we want to give you the real picture, and not just help you buy one property, but help you buy a bunch of properties to, hit your goals and also earn your trust and earn your business. And that is something I'm very proud about the team we have, and the culture we have is hey, we're going to do the best we can for the client. Are we perfect? Absolutely not. But the right intent is there, and it's hey, we're doing this as well. Learn from our lessons, learn from the hundreds of clients we work with, and plus from the podcast and the media stuff, we get such a fascinating 50,000 foot view on so much stuff going around town, and it's just stuff we want to share with people.
Yeah.
So, Newt, thanks for bringing Steve down with you in the carpool lane.
Absolutely.
Good call, Steve. Awesome to have you back in the studio,
Thank
man. I'm glad to have you as part of this. Preston, Jenny, as always, it is a blast doing the monthly market updates with you guys. And if you guys have any questions, reach out to us. A bunch of the data is in the show notes as well. But we love talking about this stuff. If you have any specific topics or trends, reach out to us. Bye, everyone.